All right. Good morning. My name is Haifa Khatib, and I am a marketing assistant here at InfoTrack. Welcome to today's webinar, where we'll hear about how your firm can take control and influence the opportunities with professional indemnity insurance. Taking you through today's webinar and I'm delighted to be joined by Lisa Summerton, Head of Strategic Partnerships at InfoTrack, who is also here with Caspar Rogers, the Account Executive, and Ryan Senior, the Senior Vice President from Paragon International Insurance Brokers. Before we begin the webinar, I would like to draw your attention to the Q&A tab, which is located at the bottom of your screen. We will be running a Q&A at the end of the session, so please type any questions you might have for either Caspar, Ryan, or Lisa, along with your name, into the Q&A box. That way, if we run out of time or your questions require further clarification, we can extract your information and follow up with you directly after the webinar. I'm now going to hand you over to Lisa. Thank you.
Thanks, Haifa. Okay, good morning, everybody. Before I hand over to Ryan at Paragon, I'm just going to spend a few minutes running through how InfoTrack help law firms to reduce risk and the product that we've built within our software to help law firms complete their PII renewal forms with more accuracy, and the report we provide evidencing the processes law firms go through our system to ensure that compliance is met and risk managed, etc. As many of you who work with InfoTrack will know, we are integrated with many third parties within the conveyancing process, from the CMS partners, the land registry, environmental specialists, local authorities, HMRC, UK finance, the list goes on, right through to lender platforms. This allows data to flow throughout the matter on InfoTrack, but also back to the CMS platform through the integrated CMS partner. When you are completing your renewal forms, do you complete these as a tick box exercise, or do you attach a detailed explanation of the process you go through to evidence you are working to best practice, reducing risk and adhering to lender requirements, SRA and protocol requirements? When working across the InfoTrack platform, we are able to send back to you the data to show you exactly what products and areas of the InfoTrack software all your team members have touched on, so that you can use this to complete your renewal forms with more accuracy. This can be found on the MI tab of the InfoTrack portal. Research from several law firms suggests that whilst they can gather some data from their case management systems, there's still a large proportion where they have to run between divisions asking whether they have dealt with X or Y, any international clients, etc. So within your conveyancing teams, this should now be reduced thanks to the data report that we provide to you. By having the data available at your fingertips and on a regular basis, this not only means that you can complete your forms without the level of best guesswork which currently goes on, but also allows you to manage the firm's risk on an ongoing basis, which is what PI insurers would like to see. If you see that there have been a number of international AML searches, you may want to investigate to see whether A, you want to be acting for those clients, or B, that the lawyer's acting on their behalf and managing the risk appropriately. It allows you to be proactive as opposed to reactive and manage that risk at the time, which is what insurers urge all law firms to be doing. We have seen on PI renewal forms, the question is often asked as to the geographical split of residential conveyancing transactions. Therefore, we have produced a heat map on the MI workspace, which will clearly show the locality of property transactions your firm has worked on, helping you to complete this section of the PI renewal form. And you'll see that on the slide now. Beneath that, you will see a graph which shows your firm's usage of the various products and touch points of the InfoTrack portal. This is a visual of the data report, which can be exported by you at any time when entering the MI portal. So that's the graph. There are two buttons. The two buttons on the MI page below the heat map, one which allows you to export the PI data report, and the second creates a PII support document. Now, the PII support document is designed to be attached to your PII renewal form to highlight to the insurer the robust processes your firm goes through in InfoTrack to ensure you are managing your risk and processes effectively. As an example, if you work with ECOS onboarding, It will explain how the software works, the processes it goes through to onboard a client, verify their identity and source of funds. It will explain which regulations it complies with and how it uses biometric facial checks for the ID, offering a safe harbor solution, and goes through the TrueLayer open banking system to verify bank statements and usual spend patterns, etc. When completing your PI renewal forms, generally speaking, you tick a box to confirm that you've undertaken processes, but this gives a really in-depth explanation as to the processes undertaken. The PI support document will provide a statement in 5 key areas, which underwriters highlight as key areas and one supporting area. So these areas are onboarding clients, reporting to lenders and meeting lender requirements, pre-completion, post-completion, and the additional one is integration. So where you use the functionality within the InfoTrack software, a statement will appear. If you don't use that specific area of the platform, then the statement will remain blank for you to complete your own statement in that area, confirming what processes you undertake outside of the platform. So lender requirements should be easier to manage through InfoTrack due to the calendar alert system, but also due to the integration with LMS, the lender platform, meaning that the priority searches and completed AP1s are now automatically lodged onto the lender platform, fulfilling the lender requirement without needing to manually hop onto a separate website to update. And a statement will obviously confirm this within the report. Also, with our AP1 dashboard, allowing full firm-wide visibility of all AP1s lodged at the land registry, requisitions coming in, cancellation notices, etc. Law firms should never miss a critical date due to a team member being on holiday or workload pressures. These features are all included in the statement released on the report to provide a comprehensive description of how you manage risk in this area. Reporting to clients with a data-driven property report, which takes data from sources, from searches, land registry, mortgages, etc., allowing you to confidently report on all relevant aspects of your client's purchase without having to cut and paste or copy type, which can lead to errors. These are just a few of the areas where risk is minimised. In reality, with InfoTrack, risk is being minimised and managed right from onboarding an ECOS all the way through to the final submission of the AP1 to the land registry. And statements detailing the robust processes are provided on the report for you to attach as evidence to your PII insurer. We've recently had a testimonial from one of our law firms who used this facility recently and has had an £18,000 reduction from last year on his PI, so really positive news. I'm now going to hand over to Ryan Senior from Paragon, who along with his colleague Callum will run through their thoughts on PII renewals, what areas are within your control and how insurers view your proposal amongst other things. Ryan, I'm going to hand over to you.
Good morning everybody. So today what we've done, my colleague Caspar and myself want to talk about is really the PI renewal. We appreciate that some of you will be quite close with the October renewal date. But how can you focus on what's in your control and then to make yourself a third risk in effect? So if we can have the next slide, please. If you think for insurers in terms of what influences them and how they arrive at their rating and how much capacity they want to give out, the policies you have to have are quite wide with the SRA. If you don't pay your excess, insurers do. Same with the run-off premium. So whatever happens, public protection is obviously at the forefront. So that does come with a cost. You're not the same as other professions. Their policies aren't as wide. Claims performance is a big factor. Historic, looking back. Economic climate and concerns about where potentially we're heading. They are really quite concerned about that. There isn't a huge amount of investment income for the premiums as well. So in effect, they've got to make a profit per policy rather than relying perhaps some extra coming in, which perhaps in 09 insurers did. And then there's where are insurers going to invest in terms of whether they feel they can make the most return. Lloyd's reduced the amount of business insurers could offer in effect in 18-19, and that led to a lack of supply. So at the moment, we've got the demand, we haven't got the huge amount of supply for each firm. If the market is showing signs of stabilising, we've got a facility called Law Select that's had 2 new insurers on it over the last 18 months. Small percentages of capacity they're taking, but it's a good sign that people are willing to join our facility. The average rating increase we saw in the April renewal was around the 10 to 15% mark. We're currently seeing nearer the 10% mark, plus any increase on your fee income. Most insurers tend to take an average, so we take an average over the current year and the last 2 to try and smooth out the peaks, really. That's what we try and encourage insurers to do. So it's a smoother ride for you in effect. And then hopefully next year we'll see more improvement in terms of the rates maybe flat or very low. And we suspect we're going to start seeing fee incomes drop as well, certainly in the property market. We know, especially for firms in the property market, that there isn't a huge amount of choice. There is a sort of thought that a firm carrying out 10% of conveyancing is probably a higher risk than somebody carrying out 80%, because you almost got your expert there. But insurers do still want to cap their exposure. The insurers who will consider conveyancing over 30%, we're one of them, but they have quite a number of underwriting controls in place, which you need to jump through in effect, show that you're a well-managed risk, and that allows them to continue offering cover. So our Select facility doesn't have cap conveyancing, and it targets regional high street firms. So if I pass over to Caspar and talk through about more what you can actually influence.
Yeah. Good morning, everyone. I'm Caspar, one of Ryan's colleagues. I know that discussions around sort of PI renewals can sometimes get a bit dry, so I'll try and give it light, and hopefully you come away with a bit more knowledge than you had at the start. So now that sort of Ryan's discussed what influences insurers and the market more generally, I'm going to focus on what is within your control. So I'm sure you've heard the analogy comparing underwriting to driving a car with the windscreen blacked out. You can only see through the rear view mirror, with that view being the historical performance of solicitors' PI. Sadly, even that rear view mirror has been useless in recent years at helping insurers predict the future. So with insurers' confidence right now at an all-time low, it's essential and more important than ever that you demonstrate how important risk management is to the culture of your firm. One way that you can ease your insurer's anxiety is by paying close attention to the quality of the presentation. The advice I give my clients when completing their proposal form and all the supporting documentation is to really try and put yourself in your insurer's shoes, in their boots. Try and ask yourself every single step throughout the process, sort of why are they asking these questions, and what can I do to provide them, provide that sort of comfort to them. We take most risks to insurers in person, but we'll send them by email as a last resort. So in both instances, the underwriter has about 20 to 30 minutes max to assess whether your firm is viable to quote. It's important to keep this in mind, as obviously if you fill out a threadbare prop with insufficient answers, then this drastically reduces your chances of receiving a competitive quote. A weak submission makes it easier for the underwriter to decline your risk, and conversely, a comprehensive submission would make it a lot more difficult for them to decline. And at the end of the day, what's most important is showing the insurer how you demonstrate to them how you mitigate risk. So I'd encourage you to show this on an additional sheet to your proposal form. These risk mitigation measures might range from anywhere from staff welfare to a new or improved IT system. The way you perform real-time supervision and handle sort of the higher risk work by having a second pair of eyes can also help demonstrate your approach to claims mitigation. We've had a case recently where a culprit has been investigated by the SRA for firms' lack of supervision, and a very much avoidable claim has arisen. An easy way around this would be to ensure that you have a basic supervision policy set out with PCPs, whereby there's always a second pair of eyes on matters prior to exchange or before going to trial. And just remember that it's always a two-way street, so your staff should also be aware of when to seek out a supervisor. At the end of the day, unless you tell your underwriter this sort of information, then how are they expected to know that unfortunately they're not mind readers?
Thank you. So, following on from Caspar's points, what we encourage you to do is to review your presentation. So when you've completed it, you have a look at it and make sure that if you're sitting in the underwriter's shoes, your broker will steer you on this, but you actually understand what your firm does and how you do it and the risk mitigation. We received a proposal form recently. The firm was 100% litigation. We couldn't tell from that form what they were actually doing within that work time. And we couldn't really tell an awful lot about the firm. So at that point, we didn't take it to the market because we wanted to understand, so we presented it in the best way. So we asked a number of additional questions, and we found out through that process that the majority of the litigation they were doing was below their excess. So we can then present it to insurers that it's, there is an exposure in terms of lots of claims and your aggregate excess being breached, but the likelihood of one claim going over the excess was very remote. We could talk through their system. There was clear escalations in terms of key dates. So with all that extra information, we were able to get a quotation, and it was a good one. But without that extra detail, we would have struggled. Property, certainly for London firms, insurers tend to get quite interested. So talk through what you do. Caspar mentioned the second pair of eyes. Do you do that? And it could be the 2 million level is not always the worst area, if you see what I mean. If you're selling a property for 3 million in London, that's probably far better than a smaller equity release transaction. So discuss your thinking in how you mitigate risks. But in effect, insurers are looking for quality risk. They're looking that they can actually make a profit from from offering you insurance. And really, we're trying to work with you to help you demonstrate that. But again, just put yourself in the insurer's shoes, make sure that they can actually understand. If we can move to the next slide. Then back to Caspar.
There we go. So claims experience. This is obviously a really important part of the whole renewal process, and usually the first thing we expect our clients to begin with. And we roughly recommend they begin reviewing the claims experience around 12 weeks prior to renewal. Insurers at the moment are asking for sort of 10 years worth of claims experience, just so that they can get a better idea of how you coped previously or previous difficult times, how you cope with the aftermath of the last financial crisis. So first things first, check with your broker that your claims records are all up to date, they're all accurate. Can you close off any claims? Insurers might see a nil reserve in your claims experience, and they might worry that this could explode, obviously, into a much larger number. So be having these sort of conversations with your broker just to see how that open claim is progressing. You'd be surprised to hear that a lot of insurers quite often won't keep their clients, their firms, in the loop when they're adjusting claims reserves or making payments. What does your claims record look like? Do you have one large loss or lots of smaller ones? In both scenarios, you'll obviously need an explanation for what was the root cause and what you have put in, what measures you put in place to prevent a chance of this sort of claim reoccurring. Have you also reviewed similar files, similar matters, just to ensure that the same mistake hasn't been made anywhere else? The smaller, higher volume losses are of a greater concern to the insurers, purely because they might be concerned that there's an issue with a specific fee earner or with a specific department. So just make sure that you've taken the necessary steps to address the scenario, and so that you can, when the time comes, you can justify these claims to your broker, you can justify them to the insurer. We actually had one case quite recently where a client had a number of residential conveyancing claims for 1 year. We investigated and we saw that they all came from a 6-month period and from one fee earner. Now, as it panned out, that fee earner was actually ill. So what we were able to do was provide the file review checklist. And they looked through 25% of the purchase transactions and nothing else came out of the woodwork, which gave that much needed comfort to the insurers. Large one-off losses are a lot easier to handle, but obviously they still need to be looked at. An example would be a dream VAR seller ID fault, where you look into the processes. They normally come out fairly easily, and you don't expect another one, but you can still review the procedures and the measures that you have in place. The firm that we dealt with moved from the receptionist checking the ID to one of the fee earners via this sort of electronic process, which was linked to a government database with a photograph, so there was no way that could be forged. It would also be quite timely to mention InfoTrack here. If you use InfoTrack's electronic client onboarding service, you can obviously drastically reduce the risk of these seller ID fraud claims arising, and do make reference to your use of InfoTrack when it comes to your proposal form, as it's most certainly a green flag to insurers from the discussions that we've had with them recently. So when it comes to choosing your broker, you obviously need to make sure that you choose your broker carefully, and nurture that relationship, as it really is vital to how your firm is portrayed in front of the insurers when it comes to the renewal process. Make sure they're experts with your presentation. A skilled broker should really be advising you on almost every single aspect of the presentation. The philosophy that we like to have at Paragon is one of sort of tough love, where we play the devil's advocate and always ask the hard questions. Just so that we can engage with the insurer and negotiate the best possible terms for you. That really allows us to be on the front foot as opposed to the back foot. Obviously, it comes as a shock to hear that those laborious proposal forms you fill out every year quite often do not adequately cover the emerging threats, whether that be questions surrounding developer work or how your firm simply coped during the SDLT holiday. Some brokers merely just present your submission to the underwriter and then await sort of that inevitable line of questioning which will ensue. And this presents two issues to us. Obviously, it can extend the whole negotiation process in a market where typically the early bird gets the more competitive price worm. And also a second issue, it puts your firm on the back foot with the underwriter driving the agenda, and that really weakens your negotiating position. Different insurers obviously have different risk appetites, so you might not actually be getting the best renewal terms simply because your broker has limited market access and can't show you renewal to an insurer whose risk appetite aligns with your structure. Specialist conveyancing firms tend to be the ones that we see most often struggling with this issue. And this is actually where our law select facility comes in, because it's tailor-made for these sorts of struggles, because we don't have any cap on work type, so you can have 100% conveyancing and we still consider offering a quote. Will your broker be going direct, or will they be sub-broking to get your risk to the correct insurer? Always be wary of sub-broking. When they pass you, this is basically when your incumbent broker passes your renewal to another broker in order to access a certain facility. It always leads to additional costs, as you end up feeding two mouths instead of one. You're paying for the brokerage to two different brokers instead of one. And quite often as well, it can just dilute the sort of narrative of your the message that you're trying to convey about the culture and ethos of your firm, so you lose some of that sort of gravitas. Does your broker approach insurers who reward you for holding Lexel or CQS accreditations like our law select facility? These are just some of the things you really should be keeping in mind when you choose your broker. So then moving onto the proposal form and sort of the actual process itself. In July and August, you really want to be receiving a proposal. You want to have received your proposal form by then. and also make sure that you have your latest set of accounts and your claims experience ready by this point as well. I know I've spoken about this at great length already, but I really can't place enough emphasis on how important it is to show that you are a viable firm by simply just demonstrating how you manage risk within your proposal form, but also on an additional sheet. Complete that proposal form as comprehensively as possible. For example, when you're asked what controls you have in place for reporting on escalating ground rents, don't just say we have controls. Honestly, you'd be shocked at some of the answers that we see in these proposal forms. So that might sound simple, but please make sure you fill them out as comprehensively as possible. The SDLT holiday, as I mentioned earlier, it's another topical concern for insurers at the moment, and is very, very loosely addressed in the proposal form. The pressure of working the long hours combined with that lack of supervision means that the insurers are expecting a large influx of claims at some point. We'll probably start to see them come out in a couple of years. So what can you add to your submission to show that you've really mitigated this risk? One thing that we've seen risk-averse firms do is review files from the SDLT holiday period. Normally, this might seem cumbersome and unnecessary, time-consuming, but it really does demonstrate to your insurer the measures that you have in place and how much you look after your risk mitigation processes. We've also seen some firms place a cap on files opened or even employ more staff. And we even had one managing partner who checked every single transaction for completion. So these are just some of the things that you can do in regards to the SDLT holiday, and really make sure that you convey this information to the insurers, because otherwise they'll have no idea about it. And these are always green flags. Of course, there are still the risks emerging from multiple dwellings relief and equity release work and escalating ground rents. They might seem like they're coming to an end, but they're not, because the insurers are still picking up the bill for claims in these areas. So it's valuable that you talk about how you approach these risks. With equity release, are you explicitly telling your clients in writing to seek independent financial advice, and are you strictly only offering them legal work? On the London property side, as Ryan mentioned earlier, really make sure that you show how your firm undertakes additional due diligence in regard to any high value transactions. As I mentioned earlier as well, the development work is still up there amongst the biggest red flags for insurers. So if you do this sort of work, then to really talk about those sort of investment schemes you declined, that work that you have declined, and that you don't tend to work on off-plan transactions where they pay a deposit of higher than 10%. Also discuss with the broker any ongoing developments which you acted on, where there might have been a delay or issue in construction. Don't shy away from these sort of challenging topics. They're really important to discuss with the broker. With matrimonial work, you suggest to your clients that they are obtaining a pension report and detail that in writing. Another thing we've seen insurers asking about. And another issue we haven't mentioned yet is your firm's financial health. Insurers are becoming increasingly worried at the moment that, especially for the smaller firms that took out the large CBIL loans during COVID, that they're going to get hammered by the monthly payments as the interest rates continue to soar. So if your financial situation is slightly precarious, then please do explain on an additional sheet, or do tell your broker what measures you have in place to offset this risk. Perhaps you own leasehold to your office, or you've invested heavily in IT or marketing during COVID. So you'll be expecting to make a return on that investment. Do just jot down your financial plan and expectations, just so you can quell any doubts that the insurers might have about the finances. And one final thing to consider in August is finance for your premium. Have your broker seek out some options for you so that you are ready to pay when the insurer is ready to ask you to make payment prior to them buying your cover. Moving into September, this should be when you start to receive quotations. your broker really should be keeping you in the loop at this point, and with all the various offerings that he has in place for you. And always be wary to choose solely on price. Sometimes there might be an option which is slightly more expensive, but can offer you certain risk management and compliance tools that another insurer might offer. And these sort of offerings can save you money further down the line. So do keep that in mind. Also on price, always be wary of those new insurers that you've never heard of that come in at a price which is sort of 20% below the rest of the market. Because as we've seen in the last 10 years, there've been plenty of cases where insurers have come into the solicitors PI market doing exactly this, offering cut prices and 18-month policies, only for them to go bust 1, 2, 3 years down the line. So keep that in mind. It's also important to note that it goes without saying, as the renewal season progresses, the underwriters, you've really got to think about the underwriters as well, because I know it's hard to have sympathy for them a lot of the time, but their work does become a lot more saturated. And make sure that you get your submission in as early as possible so that your broker can really engage with the underwriter. Entering the extended policy period is not a position you want to find yourself in, and obviously, I mean, you all know about the consequences of entering the cessation period, where you'll be forced to shut up shop. So do everything you can to avoid doing it at all costs. We often receive submissions from the more distressed risks in late September, but it's often too late to sort of apply proper care and due diligence to those sort of risks. So if the possibility is there, do try and make sure that you make a decision and get before it's too late and get your submissions in early. Over to you, Ryan.
We just wanted, before the end, just to touch slightly on cyber. There was clarification at the last renewal that cyber's not included within the PI. So your Friday afternoon type fraud would still be covered in terms of the client. Things like when an employee clicks on a link, introduces malware to your system. It was never the intention that PI would include first-party losses, which really, are the firm's losses, not your clients. So we would encourage you to consider purchasing a separate cyber policy if you don't already. Some insurers insist on it with the PI. Others ask the question and recommend it. But to give you an idea of a couple of claims recently, one of our clients found malware on their system. It got in through a port which we believe the IT company left open. The fraudster didn't do anything with this malware, but we believe they were obviously watching. The cost to then wipe the system, restore them back up, deal with the ICO, the SRA, etc. 40,000 was wrapped up in costs overall. So it shows you how much time and money goes into after the event. Another one where the fraudster managed to get into an email account, and they did this through SID 365, and there wasn't the link wasn't closed in effect. So you normally assume you would go through your system. They managed to go direct and guessed the person's password, and that's cost 28,000 because they sent something like 1,400 emails. And then that had to go to the SRA, Information Commissioner, also check it had any money being paid by any of the clients. Luckily, the person wasn't in conveyancing, so that helps. But just consider the cyber, because whilst there's cover for the losses, it's more the GDPR breach, the data restoration, removing the malware, which we see commonly. Ransom demands are rarely paid, but it is getting more and more high profile, and fraudsters are just trying to find new ways of getting it.
So I mean, just to wrap up, hopefully you've learned a thing or two about how best to approach your PI renewal. Hopefully we haven't lost any of you yet. I know we can sometimes ramble on, about that PI renewal. But yeah, if I can leave you with one message, it would just be that despite the sort of bleak macro outlook that you're constantly reminded of, there are still certain things within your control. And one of the most important thing you can do is just be proactive. Really put yourself in your insurer's shoes at every single step throughout the renewal process. Try and understand where those risks are coming from, and demonstrate what you as a firm are doing to mitigate those risks. And because, I mean, at the end of the day, if the information isn't there on your proposal form, and if you're not telling your broker, then how is that underwriter expected to know? As I previously said, the insurers aren't mind readers. So yeah, just be proactive, and really demonstrate how you're mitigating that risk to the insurers. Thank you very much. And if you'd like to discuss anything further, please do take a note of our contact details on that slide just there. And yeah, just do give me a call or drop me an email. Thank you very much.
Thank you all for your presentation and insights. I can see that we've had a few questions in from our audience, so let's just jump straight into it, the Q&A session. Okay, we have a question from an audience member for Lisa. I'm not sure if I understand where I can access this information through InfoTrack.
Okay, so on the InfoTrack portal, on the left-hand side, you have some tabs running along, which sort of show you your onboarding, your searches, your workspaces. So basically different workspaces. And along there, you've got your AML dashboard, etc., your AP1 dashboard. And at the bottom, there's one that's called MI workspace. When you click on that tab, it will bring up the screen, which shows you the geographical heat map. And below that, the graph, and below those two, there's a couple of tabs on there which allow you to export the data for one, so that you can actually see how many AML searches have been undertaken, whether you've got any international searches, what lenders your conveyancers have acted for, so that you can review those, etc., which will help you then to complete your form. And the second one is the PI support document itself, which gives you those statements evidencing to the PI company the processes your law firm has been through to ensure that they're reducing risk, etc. But if you need any specific guidance on that, then please do message again, and we can make sure that the AM comes back to you and gives you a demonstration of that.
Thank you, Lisa. The next question is for Ryan or Caspar. Can you explain how it works if our broker takes our proposal from form to another broker instead of direct to an insurer?
Yeah, I'll answer that. So it's basically, I mean, I referred to it earlier, it's basically called sub-broking. You might hear of it as wholesale broking. It's the same sort of process. You, as your firm, just takes the proposal form to your incumbent broker, but that broker then won't have access to certain markets, whether that's our exclusive facility like Law Select, or maybe Marsh's and GLT's AmTrust, or Lockton's HDI facilities. That broker won't be able to access those. And so what they'll do is they'll approach another broker who does have access to those markets, those facilities, in order to get a quote from them. And as I said earlier, there are some risks that come with this. I mean, the main one is you end up feeding two mouths instead of one. And the second one is that you end up diluting the power of your message throughout your renewal.
Okay, thank you. The next one for Ryan or Caspar is someone's considering taking over another firm. What should their concerns be from a PI perspective?
I mean, your main concern for the PI perspective, you really want to be carrying out those deep sort of due diligence checks. I was actually speaking to a consultant of ours who helps out a lot of our clients recently, and he was telling me that he's helped out a lot of firms who've been buying smaller firms in the local vicinity, local area, and he said that he was absolutely shocked to see that when they were buying these other firms, they weren't even checking those firms' claims histories. So that's probably the most important thing. Obviously, check all the financials, but really make sure you dive into their claims history just to see that everything, that they're performing well, that they have an understanding of the law, to be honest.
Thank you. And another question for Ryan or Caspar. After I've reviewed my claim summary, what should I do if I do not agree with the amount reserved by insurers for payment?
What you normally do is contact your broker and have a discussion of your faults, really. Then they can take it to the insurer to challenge that for you. So really, they just need to understand the matter, where you're coming from, and then it's a conversation, really. Insurers would normally have, or the defence firm appointed would have a view of why they've put those reserves on there. But if you've got a different view, everybody's happy to challenge that. It's always good too, because you tend to find, certainly the defence firms don't think your PI renewal is coming up, so there may not be an urgency to reduce or remove a reserve. But there's no problem with challenging at any time. But do it through your broker. Just give them almost the ammunition to help you.
Thank you. How many claims and circumstances are due to process failures compared to understanding of the law?
I'd say probably the majority. We're certainly seeing some silly type errors coming through at the COVID side in terms of mistitle issues or missearches. So it tends to be, you very rarely get a severity type claim, which would be, say, £1 million by Dream Bar transaction. You normally see lots of small numbers. If we could reduce that number of small matters, that will probably have the biggest impact to the insurers overall in terms of the loss records, which then obviously drive the premium. So the frequency is normally the worst problem.
Perfect, thank you. I believe that's, we've got one more question. Oh no, I believe that's all the questions we have for today. I would like to say a big thank you to Ryan and Caspar from Paragon for joining us today, and also to Lisa Summerton from InfoTrack. And I hope you all found this session helpful and informative. Thank you all.
Thank you.
Thank you.
Bye.